Hello, everyone, and a very warm welcome to today's major markets update for Friday, February the 17th, 2023. Markets broke below some levels they should not have broken below, especially for the S&P 500. The NASDAQ 100 is teetering on the brink of destruction. And therefore, we have our C wave of the larger fourth wave in play. I am sorry if I have been flip-flopping flip-flop between the smaller fourth wave and the larger fourth wave. And that is unfortunately the nature of fourth waves. When you get three waves lower, expect at a minimum three waves back up, because fourth waves can always become more complex. We still were simply not able to take that larger fourth wave off the table, though it became less likely. Why? Because we got five waves up of the previous week's low. Unfortunately, the market decided to morph that into a C wave of a irregular running flat B wave. Extremely complex. That's a unfortunate way it is. That's why we have these price levels to watch. That's why we need to see breakouts. Then we got a ABC setup, which looked like a 1-2-1-2 setup, because ABC is a 5-3-5, similar to a 1-2-1-2 setup, a 5-3-5 setup. So that is always then confusing to know which of the two it will be. Then the market will decide which of those two options it will take based on new information that becomes available. In this case, that was the PPI data yesterday. The market didn't like it and decided to morph everything into a larger fourth wave. Again, not necessary for the NASDAQ 100, and I'm not even going to talk about the Dow Jones, because that one is just a total nightmare to assess, but we'll get eventually back on track with things. That said, there will be no update on Monday because the financial markets are closed in observance of President's Day, which is an official holiday in the United States. As such, I will, of course, observe it as well. And I will actually also take 2 days off to recharge after a very intense 6 weeks so far. And I simply need to recharge because I am getting migraines to assess this market as good as I can. So you only miss 2 days. That's just the way it is. We cannot do things all the time. And the other reason is that I actually was scheduled to go for a 10-day trip to Peru to visit Machu Picchu, Lake Titicaca, Lima, and some other famous places. But unfortunately, due to the political and social unrest, if you are not familiar with what's going on in the rest of the world, there is a level 3 to level 4 travel advisory for Peru, and the beautiful travel agency called Exotica, never ever book through Exotica, by the way, decided to do nothing and actually wanted to let us travel to it. So we canceled it and had to eat all of our costs pretty much, because travel insurance don't really cover force majeure, as they call it. So we're in a pickle. Just so you know. Anyway, fourth waves are the most variable of all structures. That's just the way it is. Back to the charts. The last 2 weeks have reminded us of this very fact. Once again, I call it the flubber wave. And that was when we get this flip-flopping between options. I'm so sorry, but that's just the way it is. Third waves are easy. It's up, 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 or down, down, down. Fourth waves is flubber. It can be anything at once. It can morph into anything. So most bullish wave count, wave 5 of 3 of C of B, flipped from least likely the week before to most likely this week to off the table at the end of this week. Why? Because the index morphed into this expanded running flat B wave, which I will show you in a bit, which is extremely complicated. Second bullish wave count, that we're in wave 5 of C of B, was most likely for the NASDAQ semiconductors IWM. It still is possible for the NASDAQ and IWM, not for the semiconductors anymore, because it made a lower low today. So the semiconductors I will show is after 3 waves lower, expect at least 3 waves back up. And why? Because corrections can always become more complex, like we saw now. So if the market desires to do so based on new information becomes available, in this case, that was the PPI data yesterday. So that's why we have this constant confusion and tug of war between the green 4 and the 1 degree higher red 4. and the indexes are still a bit misaligned. Compare where this Dow Jones is versus tech and other ones. It is a mess. This also still makes me favor the bearish resolution over the intermediate to long term and not the bullish resolution. That remains the case. I still cannot confirm that we're in a new bull market as some would really like us to see. We'll get there when we get there. I haven't seen 5 waves up. That is still possible. I haven't seen it, so I remained of the notion that the bearish case is still very much operable in the intermediate to long term. So the nested 1-2 setup that I mentioned on Wednesday that was in play is of course now off the table because we broke below some of these key levels, 4104, semiconductors, etc. So ideally, the S&P 500 is now in a smaller orange micro fourth wave with a final fifth wave lower anticipated to about 4,040, 4,010. So we're already getting very close to that target because I think today's low was 4,047. So please take that into consideration. If we go above 4,095 from today's low, not make any lower lows, odds are favoring that wave 4 has already completed. Wouldn't surprise me. Remember, fourth waves can do whatever they want to do. Lastly, for the NASDAQ100, it can still try for a 1-2 setup because we didn't go below last week's low. It is right on the brink, but then we had a leading diagonal first wave, which often causes a very deep, severe retrace for wave 2. So below today's low, and we're going to go to 12,200, possibly 11,880, 12,030. And from there, we should then rally to 12,900, 13,290. Okay, so please keep that in mind in a risk reward perspective. The NASDAQ 100 is now at 12,360. Okay, so it's a long story. In the end, always have a stop loss in place. I have to scroll through all of these to then go to the charts. So again, to remind you of the Elliott Wave, please go to my website, log in here, enter your password, and here it says how to use my work, trading strategies and trading psychology, and how Elliott Wave works, corrections explained, and how to use it for your trading. It really shows you how after 3 waves lower, a correction can be considered complete, because corrections are always 3 waves. But if we then get 3 waves back up, then we know it's going to morph into a flat. Okay, so the market reserves the right that we need to see these impulses higher, breakouts, all that stuff. Okay, so that's really for new followers a must watch to understand. And it is also on the slides. Once again, I really want to make sure you understand that if we see the ABC, right, this is a 3 down, 3 up, 5 down. So we can see 3 down, so potentially the correction can be complete. If we see 3 up, oh, then we know we're going to see 5 down. All right, and the market will hide its intentions of this B wave very, very well, and I'll show you that in a minute. All right, so here is the NASDAQ 100. So it can still do a bottom for this wave 2. Clearly below the blue line, which is at 12,204, and we can target 11,880, 12,030-ish. Okay, so the break below yesterday has fulfilled the symmetry downside target, and we went a little bit below it, but not on a daily closing basis. For my new followers, please remember, most of my work is assessed on daily closing basis. I don't care if it stabs to 0 intraday, if it ends at infinity, at the end of the day, that's the price that matters. Alternatively, this is then the next wave count that aligns with the S&P 500 preferred wave count, that we had a B wave here of a running irregular flat. Let me delete this little C here because that is not necessary. And you can see how complex this was. So then we had a wave low here on the, I think this was the Fed day or whatever Powell was jawboning about. And then we have this very complex ABC lower. So it's ABC lower, ABC up, ABC lower, 3 waves. And then we have actually 3 wave B here. As you can see, wave B fails to go above here, which means it's a running flat. And this is still considered 5 waves of a, in this case, diagonal C wave. And we should now impulse lower for this C wave, because remember, if this is a flat, it is 3 down, 3 up, 5 down. Okay, so if we break below today's low, the ideal target is around 12,200, but we can easily go to this blue target zone. Okay, we'll deal with it when we get there. So similarly for the S&P 500. So the S&P 500 had 5 waves up here from the February, I believe, 8 or 9 low. That was initially considered by me as the first wave of a larger 5th wave to 4,300, potentially 4,260. Instead, the market morphed this into a C wave. C waves are also 5 waves. And you can see here how complex the correction became. A, B, C lower for an A, B, C higher for a B. Then this was clearly a C wave lower. I remember it well, clearly 5 waves. So this is then wave A, 3 waves. Then we have a very complex, irregular, also the B wave in itself was an irregular flat. So the B wave of the B wave was an irregular flat. That's how insanely complicated this nightmare is. And we are now impulsing lower. Today's intraday high here was a nice blue wave 4. I think we had blue wave 5 at today's low. Note we've reached the ideal wave 3 target zone. We've reached the ideal wave 4 target zone. And now the ideal wave 5 target zone in orange should be on tap somewhere between 4,020 and 4,040. And as you can see here, we have tremendous potential overlap here of 1, 2, 3, 4 different wave degrees at around 4,040. So don't be surprised if that's going to get reached, and that's all she wrote. I have added this trend line that's been in place since the October low. So we can still try to tag it. It doesn't have to, but wouldn't be surprised. If we go below it, things start, of course, to become a little bit suspect. Otherwise, we've reached the wave 3 target zone. We've bounced so far, and we should now be on our way lower for this wave 5, ideally. If not, then we need to get back above 4,095. If we get back above 4,095, and especially 4,100, somewhere around there, then we have overlap between this orange wave 4 and this orange wave 1, which is not allowed in the Elliott wave. That means we've already completed the C wave of the 4th wave. Okay, so remember, these are all very tiny scribbles, and the tinier the scribbles, the more difficult it becomes to interpret it. But this still looks good. I have a 3, a 4. We bottomed where we had to for wave 3. We've now reached wave 4. It wouldn't surprise me if we get a down day on Monday and then turn around to Tuesday, something like that. I do want to share also the 5-minute chart of the S&P 500, not from a wave count perspective, but from a technical indicator perspective. Okay, so here is the RSI 5, and here is the MACD on the 5-minute time frame, and this is our S&P 500 year to date. As you can see, we've had the lowest RSI 5 reading today, as well as the lowest MACD reading today. It doesn't say us much, but it tells us we're getting pretty exhausted. If I'm going to go all the way to the October low, since the rally started, here on October 9th, you can see this is actually the 3rd lowest MACD reading on the 5-minute chart since. So odds start to favor that we're getting close to a bottom, okay? Compare that, for example, with the previous ones where we have all these lows. And even the RSI 5 is the lowest reading we've seen ever since the rally started since October. So if we're still in this rally, we want to compare apples to apples. If we're still in this rally, it means we're getting pretty oversold, and odds favor that we are then closer to a bottom than to a top. So let's add these MACD readings here and here and see what we got. So here we were, of course, very close to a bottom, tiniest of downside left and then upside potential. Here we were still quite midways of a decline. So we had some downside left and then of course tremendous upside. It's the same with these readings here. It doesn't necessarily mean the bottom is in, but it shows that if we get these rather extreme low readings, we're getting often closer to a bottom, right? Close to a bottom, went a little bit lower, close to a bottom, 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 a little bit lower. Can repeat itself, but eventually then over the intermediate term, the upside potential was much larger than the downside risk. So please keep that in consideration. The 5-minute chart can be greatly used for intraday trade. So just wanted to say, and This assumes that we're still in the rally that started in October. Okay, I'm still missing this fifth wave, but this market in 2022 has surprised me many times that there is no fifth wave and it just flubbers along and decides to decline. So please remember that there is no, by no way, a guarantee that we must see a fifth wave. There are no guarantees, but I miss one. I do. Anyway, here is the semiconductors. And we had the orange or the red wave 4 here at the low last week. Why? Because we did an ABC lower. And then now you can see we did a ABC higher, and we're back to where we came from. So this is now morphing into this more complex wave 4. This is the way I count it. It can be counted differently. The gray wave A could be green wave A. Then we have A, B, C for blue wave B. Whatever, it's fine. What I do want to see is get us above the recent highs here at around 31.28. And then we can target into the 32, 3300s. We can still drop a little bit lower. Okay, so the point is that we are now in this ideal wave 4 target. So if we go below 29.25, things start to look a little bit dire. So this is really our cutoff. Okay, I don't want to see things go below it there. And if we can rally above the blue line, that will increase the odds tremendously, of course, that this wave 5 is underway. On the shorter time frame, it still looks like we are missing a final fifth wave lower. If I just look here, then this is wave 1, and this is wave 2 right there. Wave 2 was the bounce, and then we had, of course, wave 3 here. It's a very crude method. And then a wave 4, and we're still then missing a smaller wave 5 in alignment with the S&P 500, and it could very well be true for the NASDAQ100, though we don't have full confirmation yet, of course. That's below 12,200, then we have this wave count. So we're getting very close to resolution. Then the two last and least obvious indexes, this is the IWM/Russell 2000. Yeah, I can't make soup out of this one. And even if I can make soup out of this one, I'm not going to eat it. So this looks like whatever. As long as we hold last week's low, we're fine. But this just looks like, once again, flubber. So we can easily go to 186, 182 still to be determined. Don't like it. From a trading perspective, these are markets where you rather stay out, because when things are uncertain, you want to stay out. When things are more certain, you want to be in. Same here. Look at the Dow Jones. We're back to the 50-day moving average once again. We've been there pretty much yesterday, very close. So 1, 2, 3, 4, 5, 6, 7, probably 10, 20 times over the last 10 days, right? So this is crazy. I don't know how to wave count this. I do know we break below the 50-day moving average, we'll target 33,250. Below 33,250, we target 32,500, the 200-day moving average. We break above resistance that has held for many, many times, then we'll eventually see some sort of flubber wave to the upside. This also starts to me to suggest that we're getting more and more into a corrective bounce than a new bull market higher. I showed you that one, I believe, on Wednesday. It is possible. It is still very possible, but this type of price action is not very bullish. That is my concern. Bullish markets have this nice V-shaped recovery and kind of continue to rally, V-shaped recovery. And this might then eventually turn into a bull flag. All that stuff is nice and dandy. So far, this looks weird. So that is really the whole gist of it. I'm going to keep it simple, price charts only. Don't need to look at anything else. Remember, markets are closed on Monday. Enjoy the 3-day weekend. Open on Tuesday and Wednesday. I will be hanging out a little bit closer than Peru to take a few days off to recharge, get rid of my headaches because it's been a headache market. This flubber wave. I despise fourth waves, but it is what it is. We have our price levels to watch. I think we have still a nice potential impulse lower. By the way, below 3,980, I'll put it on the slide, and it's probably going to be lights out for the market. So we have definitely a line in the sand. I'll put it on the slide. And with that, I wish you all a great weekend, and I'll see you all next week. Take care, trade safe, and have a great rest of your day. Bye.